So from here, we're going to take a look at Ethereum. Let's launch the chart. And Ethereum, you could see here, we have the white fib, which is here. Here we have the white fib, which is drawn from the swing high here to the swing low. And then we have our overall fib, which is the yellow, which is from the super all-time high swing high to the candle body swing low down here. And really, things just line up relatively good with it going from the swing high wicks to the swing low candle body, which, I mean, that's just things you play around with as you trade. But then I also wanted to add in a fib extension for me, or a more, short-term fib. So I went from these levels here of around about $35,000, $36,000 before we melted. And I went all the way to the wick low here of $880. And excuse me, I meant $3,500, not $35,000. We're on Ethereum. So Ethereum really does look good, besides the rejection that we had last week. To close the week, we closed super low down here before the current weekly time frame opened, and it's just a doji down here. Really, we haven't gone too much to the downside. We really haven't retraced to the upside. But just looking at these levels here, I want us to get back above the white fib and then start getting candle bodies to close above our yellow fib, the 236 level. And just like Bitcoin, how I said there's the trend line levels with Bitcoin, we have a fib level, and then we have the red resistance box. We have that as well with Ethereum, and I did a trading view idea. That's why I have this arrow pointed here. So I'm expecting, if Bitcoin starts pumping around late November, early December, I would expect Ethereum, Ethereum always lags behind Bitcoin. So that puts Ethereum around the $2,500 level here in super early January, the first week of January. Okay. So these are levels to look out for Ethereum. And the way that I've explained Ethereum is if you're entering at these lower levels here, or even at current price, I would, take profit early and often, even to retest the 236 fib level here in yellow. I would probably close 10% of my trade. Then once we got to the red resistance line, I would close another maybe 15%. So I would be out 25% total. Then once we start wicking through, potentially going to the 78.6, the white fib level, wicking up here before we get rejected, I'd probably get out another 25%. So I would be out 50% overall, and I would just have a tight trailing stop loss. So as price goes up, my stop loss goes up. So if price rejects back down, whenever it does come back to retest these levels here, because it's always going to come back and retest it, then that's when I would start getting back into a trade.
Oh, I see. So how the market is, you want to take profits when you can.
Oh, of course.
Yeah.
Anytime you're in profit, especially with how the market's been moving lately. So that's Ethereum for you. If Bitcoin was around late November, early December, that puts Ethereum here about the first week of January. And again, just trade safe, trade smart, man. Just don't expect us to go from these levels here up to the all-time highs and start creating new all-time highs.